Hey there traders, hope you guys are doing well today. It's the weekend here and I just wanted to make a video that's really going to benefit you on market maker psychology, market maker traps, and how retail traders keep failing, and what they should actually be doing. Because I used to lose a lot of money in the markets just like every other retail trader, because what retail traders try to do is they try catch V reversals. So the market will be pushing down and they'll always try catch a V reversal, right? It's the same thing when the market's pushing up. The market will be pushing up and they'll constantly try and catch these type of reversals because of greed. Most people have greedy strategies and they don't know what they're doing in the market, right? Because this is rare. You're only going to catch this, 10 to 15% of the time. And we want a higher win rate and we want consistency in our trading. So in this video, instead of doing this kind of thing, catching the reversals from the top, we're trying to predict the market all the time, constantly trying to predict these big moves to the upside or the downside. I'm going to show you what I do instead, and a consistent setup that I use to catch insane risk to reward and highly profitable trades, almost like you've won the lottery type trades. So stay tuned, guys. Please like us and subscribe to the channel. Please click that notification bell and leave comments. Catch you guys in the actual video. In this video, I just want to go over the typical setup that I look for the markets every week. It shows up nearly every day, but I'm only looking to catch two or three trades a week. Sometimes even one trade is enough. Get to a stage where your account is so big that even one trade will sort you out for the whole week or even the whole month. I'm just trying to show you this particular setup that I look for, and because what I find in these markets is that a lot of I've got an example here, but I'm going to show you another example first. So what retail traders basically do is they're constantly trying to predict the market. So they'll constantly try and predict the market to go short in an uptrend, right? They'll have a basic understanding of candlestick patterns and stuff like that, and they'll try to predict the market. They'll try to predict the tops or bottoms. Okay, and I know this because I used to do this, and I used to lose a shitload of money, okay, doing that. So what they say is never stand in front of a steam train, right? So if the market's pushing up, the market and it's bullish, for example, and it's going up, never stand or try and stop something that's already moving. The same thing when the market's actually falling, right? What they say is never try to catch a falling knife. Otherwise, it's just going to stab you in the hand, and it's just the market's going to carry on bleeding, and you're going to bleed with it and drain your account. And when the market's falling, never try to predict that move up, and when the market's going up, never try and just predict that move down. As retail traders, we can't predict the market. What we can do though is piggyback on the market makers' actual moves. We can piggyback on their moves because that's where the money is. As retail traders, it's impossible for us to consistently predict the market. So what I want to go over here is a typical trade that I take week by week, and I'm looking for this trade because it's quite a consistent setup that happens literally every day, a couple times a week in the market, and it offers insane risk to reward and insane profits once you master this particular setup. So I'm looking at taking this particular setup consistently, because in the markets as well, you want to trade a consistent setup. You want to look for a particular thing in the market and trade it repeatedly, consistently over and over again. Because if you keep changing your strategy and changing the pattern that you trade each day in the markets, you're going to get random results. Everything has to be consistent. Your risk management, your strategy. In order for you to make consistent profits and stay consistent, you have to trade the same pattern. So this is a consistent pattern that I try and trade. So basically, if we look at this move right over here, you'll see that retail traders would have looked at this. Look at this. So a lot of retail traders would have looked at this area right here as resistance, right? So when price came, you can see a price basically dropped, pushed up dropped again, but it came back into this order block or this zone. So this is, you can call this an order block or you can call it a zone, right? So I'll look for I'll bring up a line chart. I'll mark out the top of that line chart. Right, we can do it like this. But then I'll refine it, go back to a candlestick chart, and I'll refine that that particular order block like that, right? By bringing it back to candlesticks. You can see now a lot of retail traders would have looked at this as a zone to go short. So what they do is they bring the price back up into the zone, and you'll notice that a lot of the time you'll find a trade and it'll work out for you for a couple of hours, or at least 30-40 minutes, sometimes even 3 to 4 hours. It'll work out for you, but then you'll find that it'll come back up and stop you out at break even, or come all the way above you and hit your stop loss. Because a lot of retail traders, what they do is they will pick the top and the bottom. It'll be super rare, 10 to 15% of the time they'll pick the top or the bottom. Okay, the market makers will let retail traders think that they've won, think that they've mastered the market and they're millionaires or whatever, and they've figured this thing out. Then they'll come straight away back up, this example, and stop you out, right? If you had gone short here. This used to happen to me like multiple times, all the time. You'll find that they'll give you profit. They'll let you pick the bottom. So they'll let you pick the bottom, but then they'll come back and they'll stop you out, either at break even, or they'll take out your stop and then move. So in this example, we can see the market dropped over here. They let retail traders think that they've, mastered the markets and so on, right? And what I'll do is, in this case, I would drop down to either the 1 minute or the 5 minute. That was on the 4th of August. I'm just going to show you. Okay, so we're in this zone now, right? So prices come into that zone and they've let retail traders go short. And they've given retail traders an opportunity now to make some money going down, right? Now, a lot of retail traders would have, put their stops. They would have entered like on the 15-minute time frame. They would have put their stops over here, like at break even, right? The market would have dropped now. Just remove this. What I'm basically looking for is, I want to see the market drop, so I want to see it actually fall, right? So I want to see retail traders actually getting into profit. Now I know for a fact there's going to be traders at break even here, and there's also going to be stop losses, above where retail traders have entered, right? Because everybody puts their stops above the high or the low. The retail traders have put their stops there. What I'm looking for is the market to actually prove to drop down, right? And then what I'm looking for is I'm looking for price to come back to a structure point, either to a previous resistance or either to a previous support. So I would have this. You can do a line chart as well. So you could have this marked up. Okay, you can refine it now back on the candlestick chart. Okay, so you can do this. I'm looking for price to come back into structure, looking left. Now, what I'm looking for then is to not just, as soon as it hits the structure, I'm not looking at just blindly taking the trade, right? You can do that, but I wouldn't advise that. What you want to do is you want to see the market reject that area. Okay, now this is what you call the first mouse, going for the cheese. You don't actually want to be the first mouse going to the cheese, going for the cheese, for the actual win. Right, so you want to see the market push up. Now you want to wait for a retracement, because what they're going to do is they're going to push up and they're going to come down, because they know that a lot of traders would enter off this, right? And they would have put their stop at break even and they'd be in a profitable trade. So they even do it on the lower time frames, like the 1 minute. But we're looking now for an entry to take out this level, right? To take out retail traders who have gone short here. So market will push up. Now, never be the first mouse to take the trade, right? Let the market push up, let it break structure. You can see over here the market's broken structure. So let it break structure, let it actually prove to you, let the market show you that it actually wants to reverse, that it's turning. Then you let the market drop down. Now I also want to see it come back to structure. You can see over here the market comes back to structure, right over here, right? And then we see basically a rejection from that structure. You can also pull out let me just remove. You can also pull out like a Fibonacci, go from the swing high, from the swing low to the swing high, and you can see it's coming down. It's rejecting these areas right in between the 61.8 and the 78.6. Okay, then you would enter basically. Once you see those wick rejections, I'm either looking for engulfing candles or pin bars, major wick rejection. Once you see that, you'd put your entry, you'd put like a limit order just below here. Okay, then basically you'd be targeting, this area at the top here. You'd put your stop just below the low, the candle. Okay, or you could put your stop a bit further down at this structure and then just lower your lot size. I've shown you guys that risk calculator in the previous video. So instead of this being 1% risk, your whole 1% can be down here. So from there to there, you could be risking 1% of your account. But let's just say we entered there, and we'd be targeting new highs and further on. And so we can go to we'd be targeting minimum this area, which is like a 1 to 4. And then maybe leaving 20% on the table to target new highs. And you're probably wondering to yourself, like, how would I know that that's the entry, right? Because you can see your candlesticks tell you everything. You got to understand, firstly, the market structure. So it's rejecting structure. There's a major wick rejection. There's a major candle coming off that structure. So everything is about market structure and understanding candlestick patterns, but also understanding the market psychology about they'll let retail traders get into a bit of profit, but then they're going to come straight back for them. If you look at this on I like to base this on the 15-minute time frame. So you can see it quite often. They'll let retail traders win for a little bit, but then they'll come straight back up for them. Now right over here, they'll let retail traders win, like on this leg right over here. So they let retail traders win for a while. Then they'll come either for their break even or to stop them out. Okay, you can see this happening all the time on uptrends and on downtrends. Like this over here, they'll let retail traders win. Okay, but then they'll come straight back down for their break even. Okay, and then they'll move. So what I'm saying is the key thing is let the market prove to you first that it's going to move. And then let them come back down either for break even traders, okay, or their stops, and then shift it. But I want them to come to basically to stop people out at break even and then move most of the time, right? Because that's what happens. But you refine your entry. What I'm saying is you refine your entry on the lower time frame, such as the 1 minute. So if we look at this example over here, so if I bring up a line chart, you can see over here that this is a clear area of support. This would be an area of support. This would be an area of support. These are both order blocks. We can, so we can go back to our candlesticks and we can refine that order block. Okay, we can firstly put our zone at the beginning of that order block based on the line chart, but then we can come to candlestick patterns and actually put it where the order block started, where the actual price started in that order block, right? Where that move started. So if we look here, But as I said before, I'm waiting for price to come back to a specific order block or a specific zone. It could be this order block. It could be this order block. It could be this order block. But when price, you can clearly see on this move that I'm going to show you now, price came back to this order block. So let's go to the 1 minute time frame. So you can see here that price came back into this area, into this order block, right? Looking left. Okay, so you can see now the first mouse, I've got it here all drawn up. You can see the first mouse would be these guys, right? But so I don't want to be these guys. I want the market to prove to me that it's going to go up. Right, looking at the top here, let's go back to the 15. Looking at the top here, as I said before as well, I want to see that retail traders are in profit. You can see retail traders are in profit, right? Market's gone short. Now 70 to 80% of the time they're going to go back up for their stops. So I want to join in on that move while they're going up. So but I want them to come off a zone looking left, because most of the time you'll notice that when you are in profit, the market will drop, and then you'll see it rejecting a zone, and it'll come all the way back up and stop you out. And you'll kick yourself, you'll slap yourself in the face because you would have seen it rejecting a zone. So I want to see them come down to a zone first, to an order block. And this was our order block that we had marked out. But now I want them to prove to me that they're going to be moving higher, and they're going to go back up to retail traders' stops. You can see over here, they've pushed up. They've created an equal high over here, but they've broken structure. You can see they've broken this structure, because this is a lower high, a lower low, and then they've put in a further low. But now this lower high over here, they basically, you can see they've broken structure based on this move over here. I want to see a leg and price happen. I want to see a swing happen. Then I want to wait for a pullback. Yeah, I want to wait for a pullback because I know they're going to come back for the first mouse, tap them out at break even, and then move. So never be the person to take that first entry, okay? When you see a zone being rejected, wait for a retest. Okay, and even better yet, wait for a third touch. You can see here they've retested, they've pushed up. Okay, they've basically bounced off this structure over here. They've stopped out break-even traders. Okay, they've pushed up because they're either gonna. What's gonna happen is they're either gonna, because the more the zone gets touched, the more that tells me that that actual zone or order block is going to be respected. You can see it's tested for the second time and it's come back for a third touch. Now, what we see here is a tweezer bottom, or what you could call this is a bullish engulfing candle. So what I'd be doing is, third touch also stops out break-even traders from here, from the retest. So what I'm saying is you got to refine your entry. Don't just be the first mouse. Let price play around on these order blocks, right? Looking left. So you can see the order block. We've moved it. We've put it there. We know where it is. Price comes back to this order block, and basically rejects. So your entry would be there. You put your stop below the low, or you can put your stop even further down, put it down below this structure, always risking 1% or less. Okay. Or you could have one entry here, and then a second entry here, a 0.5% entry there, another 0.5% entry there in case it drops. You'd have a 0.5 entry here, you'd have a second 0.5 entry here. Okay, and then you'd have your stop loss for the second 0.5 entry down here. So if you get stopped out, you're still losing on both positions, you're still only losing 1%. It all depends how you want to manage your risk. Let's just say we entered here, had a stop below here. Okay, even if you entered here on the retest, okay, it would have, and you just held your stop, for half an hour. But a lot of traders, once they saw this, like even myself, once I see the market moving, quickly. That's the beauty about the 1 minute time frame, because it allows you to quickly move, get super nice risk to reward. Okay, it allows you to refine your entries as well. It also allows you to move your stop to break even like quite quickly. You can see over here, but if you hadn't held if you had left your stop down here, down here below the retest, market would have come down, and this would have been this might have even been an opportunity to scale into the trade. If you had entered at a 0.5 here, you could have added another 0.5% risk over here. Okay, so there's all sort of ways of doing it, but what I'm saying is now you can see on the 15-minute time frame, you can see how they, if you're entering on a 15-minute time frame, you would have never, it would have been, could have entered based on the 15-minute time frame, but the 1 minute time frame allows you to really like refine your entry completely better. Okay, you can see they've let retail traders go into profit, but they've gone straight back up. So the point of the video is that what I like to see is retail traders go into profit. Right, so I want retail traders to go into profit. Like for example, I want retail traders to go into profit first. Okay, then at these points where I see structure, where we see order blocks, because as I said before, the market will push up, you'll be in profit as a retail trader, but then you'll see it rejecting an order block or a zone, and it'll come back down and stop you out at break even. So at these zones, where I know they're most likely going to reverse to come back and stop out retail traders, these are the zones where I want to refine, where I want to go in, drop down to the 1 minute, and actually refine my entry, have a tight stop, chase that move down to at least break even traders, stops. Because that's how they move. They never let anyone, it's called, what they say is they never let anyone, they never give anyone a free lunch in the market. Nobody gets a free lunch. You got to understand all that stuff. Okay guys, maybe I'll go a little bit more into this in coming videos. Hope this video has clarified a few things. Maybe each week I'll go over certain setups and look for the same setups just to show you guys and to refine those entries so that each week you know what you're looking for. Pretty simple. Once you understand the market psychology and how they move, then it's pretty obvious what they do, because they're always going to come back for people. Now the market, so you got to understand when they come, at which areas are they going to start coming back for people, right? It's as simple as that, it's not rocket science. Or you could trade off basic order blocks. Okay, you could bring up a line chart, look for simple order blocks, like look at this for example. You see a simple order block. Now click onto your candlestick chart and refine that order block, which was, the most touches were here. We've got a candle touch there. We've got a candle touch over there. So we've refined that order block based on the line chart where it reversed. Okay. Now what you do is you wait till they come back to that order block. Okay, so we just move right over here. Let's just highlight that. Wait. That, right? So if we drop down to a 1 minute time frame, you can see over here the market comes down to that same order block, and what you're looking for is major wick rejection, and to the market to prove to you, that there's a structure shift. Where's the structure shift? So if we look at the lowest low was here, and the lower high was here. They've broken that high. And you can see they've broken structure, they've pulled back. Okay, they've come back to the 61.8. You can see a bullish engulfing candle right over here. Okay, so once you see that, you would enter even here. You would enter here. What I'm saying is you got to see that structure shift first, and then you enter. You can even see, even when you get it right, they'll come back for break even. So they're always coming back for break even traders. So never be the first mouse. Never be the guy that takes this move. This is the move that you're looking for. This is the move you want to see first. As price drops, you mustn't enter. Let the market prove itself to you first. Break structure, then pull back. And then you enter. All right. Because then you can see, never be the first mouse. You can see once they did that, and they went straight up for retail traders who have got lucky and picked the short going down. So they're always going back. They're always going back. But you got to find ways of going back with them. Peace, guys. Hope that helped. And I'll catch you guys in the next one. Have a good trading week.